All right, traders, it is the 13th of May, 2017. My name is Jameson. We're looking at a weekly vertical bar chart of gold. This is the end-of-day spot prices here. I've looked at some of the other software that I have, and honestly, good old Stark Charts is the best one for these precious metal trades that we're looking at. So, what do we have? So it looks very organized. This looks like accumulation, but it still looks like it's still in phase A, phase B. But here's some key things here that we do have. Some organization. In other words, we have this bullish ascending channel that's present, and it looks like prices became a little overbought relative to that ascending channel, and it broke down. Now, the difficulty here is trying to find out where prices are going to go. This is really challenging. We are able to identify a key session that presented last year. So November last year, we had a lot of supply that presented. You can appreciate that by the volume that's here. I mean, it's very obvious, it sticks out. Largest amount of selling volume or any volume that's present for several years. The key thing that's important here is that prices last week has lost this zone. So lots of distribution that's present, lots of buying, lots of buying. These two big buying efforts, not only did we see shortening of the up thrusts, but they are unable to overcome this level of resistance here. That suggests that there is some distribution. And then the character at which that we lose that, this is a pretty wide-ranging week that we have 2 weeks ago, and it did occur with some supply. So I have a couple things. In the presence of supply, prices will not break out of this consolidation range. I will suggest that, one, this is a bad trade because we're in the middle of this trading range. Why would we, buy in the middle? And I would even suggest that bears actually have the trade because here they're buying or they're selling the 200-day simple moving average. They have defined risk by the stop loss. I think that prices may very well trade higher into this 1250 range, and then we're going to break down. We're going to retest probably 1150, maybe even 1050. So long as this supply is present, this means that it is not in strong hands. There are still weak hands present, and as long as we have weak hands present, prices will not break out of that range, or at least they will not sustain those gains. All right, so now we're looking at the commitment of trades report for gold, and I have a couple of things. It looks like retailers or speculators here are bullish here, but I do appreciate that producers and users are selling. And why do producers and users sell? Is because they think that it's priced well. They think it's priced strong, so they're selling in the strength, which would be bearish for gold. Because if they think that this is a good price for gold, then where are they going to buy? And likelihood is that they're going to buy lower in that range that we talked about. So I have a bearish observation here at the commitment of trades, and it actually is their lowest exposure. They've been selling it pretty heavily here since 17, 16, 15, 14, since 2013, 2012. So I think that's pretty significant. All right, so now we're looking at a weekly vertical bar chart of silver. One thing blatantly is obvious because it's highlighted here in blue is that we do have a head and shoulders formation. So here's the left shoulder, here's the head, here's the right shoulder, and here's the neckline. And the bearish observation is that last week's session lost the neckline. So, where do we project the downward target if you're a pattern trader, which I'm not, but you'd measure from the distance from the head to the neckline and then project an equidistant, down lower. So gosh, that's probably like $10. It'd be crazy to think that silver is going to break down, as low as $10. Now, based on my methodology, Wyckoff methodology, we have a measured objective here of $15.75. So I would certainly expect prices to at least break down, test this level, and I would expect to see some consolidation before we actually try to, resume breaking out of this this range higher. And again, what we have is supply, and it's very easy to see that we have a lot of supply. We lost this zone. We lost the 200-day simple moving average. Big effort here, unable to break resistance. So that's distribution, and now we're breaking down through there on a lot of supply. I think this is bearish for silver. So now we're looking at the commitment of trades report for silver, and we can appreciate that producers and users have been selling the entire time, but they actually have been buying lately. So it's a slight conflict. Looks like they've actually been buying some of the weaknesses present. But I guess if I were to draw a trend line through here, they haven't actually committed any additional capital here. So I'm a little indecisive here. It looks like we're seeing speculators at all-time highs. So I will say that I think that based on speculators that this is a crowded trade, which would support the additional or my bias that prices are going to break down further. I'm a little hesitant, but I'm going to say that I'm bearish on silver. All right, so now we're looking at a weekly vertical bar chart of copper, the end-of-day contract or spot prices that are here. And those who have followed me previously on my public thread we did a really good job identifying that this was accumulation and it's broke out. And I thought that we would back test this area and maintain its 50% strength, and then we'd rally higher. And well, we have back tested it, but it's taken such a long time. And I think the reason is because we did have accumulation, but such buying efforts, such a big squeeze here. We kind of had a little buying climax, so we underwent some distribution. So we do have some accumulation, but potentially this buying climax kind of put us where primary supply, our buying climax, our automatic reaction, our secondary tests. And then we just kind of consolidated. I will say that we're maintaining this hash line right here is 50% of the this up wave here. So this is good bullish technical strength, and we're trading back into the 200-day simple moving average. So it looks like we're still in the process of confirming prior resistance as support. Could prices break down a little bit further? They could, but I would be a buyer of copper here. I think it may take several attempts to to enter and get stopped out. But I'm bullish, and we have a good bullish $3.10 price objective. Okay, so now we're looking at the copper commitment of trades report, and the observation is that speculators here are reducing their positions, but producers and users are buyers, and they're buyers because they think that it's cheap. So if they think it's cheap and prices are actually pulling back and back testing prior resistance as support, this is actually bullish and would also support my thesis that prices are going to continue, begin their markup and achieve that $3.10 price objective. I'm bullish copper.